there, everybody. Welcome. It's time to get started, and thank you so much for being with us today. We do have traders attending the webinar from all around the world, so good morning, good afternoon, or good evening, as might be the case in your corner of the world. Wherever you are, I think these are tough times for most of us, and we do hope that you and your family are safe and well. This is Craig at Max Trading. Chris and Eusebio are here with me, and we are glad to include you in the Max community today. Other traders will join us later by video, and we welcome you as well. I know that the COVID virus has made life difficult for many of us, but I really do love it that trading is one thing that can be done safely within your own home. This might be an ideal time for you to learn a very profitable system, and we love having the opportunity to show you this very productive system. It's an exciting time for us because we know the Max Trading System is a game changer for many traders at all varying skill levels. Everyone will love the confidence and the success that comes with using a tried and a proven system. You may not be aware that more than 2,000 traders have graduated from a Max course, and we've been teaching and trading this system for more than 10 years now. That's a lot of training, and we've learned how to do it extremely well. You will get the help that you need and more. In fact, on the 11th of June, we will begin our 69th ETF standard course, where you can learn a very profitable and a very flexible system, excellent for all markets, all time frames. If you are a trader who likes the excitement of fast charts, let's say a 1 or 5 minute time frame, you will love Max Trading. Or if you perform better, you're more comfortable on a slower chart, maybe 15 or 30 minute charts, then Max is for you. Maybe you're someone who needs lots of time away from your computer, and so you like 4-hour or 8-hour or daily charts. Max is also for you. This week I helped one of our members set up 12-hour charts, and he's very excited about trading that longer time frame. And then it's also true that if your preferred market is YM, ES, or DAX, or Forex pairs, commodities, options, or stocks, Max is for you. It's very flexible, very powerful, and you also get a great trading community. Many of you will be taking a Max course with us in just a couple of weeks now, and that gives you a lifetime Max membership. So we look forward to trading with you for many years. The Max community is not just fun, it's not just camaraderie, although those things are important, but it also provides a wealth of ongoing support and unending assistance, plus free trading workshops at least 2 or 3 times every month, allowing you to continue improving, to continue building your skills. New ideas can be really important to help us to meet the challenges of trading and the changing characteristics of the markets. I'm sure you've noticed this. Eusebio has helped us to meet the challenge by developing a solution which we call the Max Enhanced Trade Format Indicator. Now that's a mouthful, so just call it the ETF. It has proven itself to be a very effective addition to Max Trading, and I'm confident that you will love it. And you get that indicator, the ETF indicator, along with the companion, all at no additional expense with your Max training. The companion is our price directional bias indicator. It makes a huge difference in trading results, and all of these things woven together, the professional training, a great system, correct price action analysis, knowledgeable global context, effective indicators, a supportive trading community, and lifetime support from professional traders. All of these things, they combine to give you a real shot at the kind of trading that will make a difference in your life. By the way, we do not expect you to just take our word for it. We want you to see it for yourself. I will be sending you an invitation to attend a live trading webinar scheduled for this coming Friday, the 5th of June. You'll get to see on real-time charts the effectiveness of the MAX trading system. And I think the great thing about live charts is you can't exaggerate. You can't hide anything. It's all right there for you to see in plain sight. So I hope you can attend or watch the video playback. Be sure to register for that when you see the link. And I'll include that when I send you the playback video of this webinar. Eusebio is the developer of ETF as well as the companion, and he has traded the MAX system full-time for many years now. He's the perfect choice. There's no one better to give us all the details about MAX trading. Not only is Eusebio a great trader, but he's also a very skilled teacher, and he loves teaching his fellow traders, likes to help folks out. Thank you for that, Eusebio, and we're grateful for all that you do. And please show us the MAX. I'll pass the microphone along to you.
Thank you very much, Craig. Hello, everyone. Nice to see you today in this presentation room. And of course, I also warmly welcome all the participants who will watch the video because they don't have time to participate live to this presentation. So let me just make a very quick presentation who I am. So my name is Eusebio, and I am a MAX instructor since 2009. When, unfortunately, Dr. Jim Pruitt passed away. Dr. Jim Pruitt, as I will explain in a moment, is the conceptor, the designer of this trading system. And personally, so I am a past former software engineer. I have practiced that career for around 30 years, and I had the chance to work with the banking industry for the last 15 years of my career in important banks in Europe, mainly in France, Germany, Switzerland, UK, Luxembourg, Belgium, and Netherlands. And this has given me the opportunity to be in contact and to work with some important traders in these banks. And so I have learned a lot with them. But I'm interested in trading and investing for much more time. So for around 35 years now, before I started my software engineering career, and I have traded and invested in almost all the market, not exactly all, but many of them, the Forex, of course, the futures market, the stock market, and the options market. So I think that we have some concept to bring, some useful concept to bring in the traders community. So the MAX trading system, as Craig has mentioned, is the perfect trading system for many types of traders. Either you are already an experienced trader looking for consistency in the way you apply a trading approach, in the way you produce profit. When you are an experienced trader, of course, you may be a full-time trader or a part-time trader, but the project here with the MAX is to, or the object of the MAX is to multiply the profits through the scaling technique we apply within the MAX, either if you are a part-time trader trading in a higher time frame or a full-time trader trading in a smaller time frame. But the MAX is also extremely suitable for new traders, what we call newbie, as with a kind name. So, but for traders who need a very reliable, flexible trading method, being extremely defined in terms of trading process, but also to traders who are still struggling to become profitable, because as you know, trading is a difficult activity. It's not so easy. It's not enough to just watch a video about trading or to read just a PDF or to take a simple course of 1 hour to be an experienced trader. There is more than that to become successful in trading. And so this presentation is also perfect for anyone who wants to work from home. The trading activity is particularly adequate to trade from home, to use from home. And so using a PC in just a small office is enough to trade the market, whatever the market you want. And it's also a perfect activity to prepare for retirement. in a few years, myself, I will take my retirement, and trading the Forex has been an excellent activity to make my retirement a very excellent one. So planning for retirement is also one of the possible objectives we may have when we consider trading the market. And there are many other possibilities, many other objectives the person wanting to trade may have or may fix for their future, for a better future. The power of the max, in fact, comes from the idea of what I consider a genius in trading, called Dr. James Pruitt. Jim, as we were calling him, or Tiger, because he had a very strong temperament, and he was a PhD. He had a PhD in economy, and so he was very invested and interested in many types of investing tools. And so he has designed this system especially for traders wanting to trade trends, because the max is especially suited for trend trading, but also to trade some types of counter trend movement and some range when the price breaks this range. But as you will see in a moment, the max is based on technical analysis, but there is much more than technical analysis, as I will explain. It is in fact completed with another important pillar in trading, a very strict risk management. And so this is what makes the max very powerful. And the max is in fact an acronym or an abbreviation for three important concepts. The M stands for momentum. We need in fact to see momentum and volatility in order to consider a trade opportunity. And I say consider a trade opportunity because there will be several types of conditions to be fulfilled before taking the trade. And then the A stands for acceleration. Acceleration does not mean that we wait for the price to accelerate inside its movement to make a movement faster. But the acceleration refers to the scaling technique when we add to an open trade in order to progressively build a larger position, and the aim of this larger position, which is growing over time as long as we are in a trend and the conditions are appropriate to scaling, in fact. So the aim is to catch a larger profit or to extract a larger profit from that trend, while the trade risk is strictly controlled. The risk management, the trade risk management is a very essential component of this aspect. And the X stands for exit, because along the trend, along the trade, we will have to consider closing a partial portion or a portion of the trade in order to bank some profit, but also to control the risk. I will explain that concept a little more in detail when I will show you some examples. So this is what, in essence, the max is. So it's essentially a trend-following system. But of course, for any system, we have to define what are the movements we want to trade. So what are the trends? And in the max, what we define what are the trends. Then we define when a trend can start through entry setups. Entry setups are basically very specific types of pattern we observe at the beginning of a new trend or later in the trend as a continuation for the trend. Then we have to define the exit technique, how we will progressively exit from the trade through exit setups, and we will have several types of exit setups. Exit setup based on technical analysis, exit setup based on pure price action, exit setup based on some times constraint along the day, or based on some other factors like a news release, for example, or a combination of all these elements. And another very important factor of the max is the global context. So we take only the trade when the trade is in agreement with the context. This is an essential, a capital condition for the trade. So in order to have a trade, we need to have the appropriate pattern, we need to have the appropriate risk, and we need to have the appropriate context. I will explain later what the context is. And because of that, this is why the max is so powerful, and many of the concepts we have in the max are concepts used by the big traders. And this is why we have a very powerful and flexible trading system. And the max apply to any time frame and to any market. And so what I'm going to show you before showing more in detail what the max is, I will show you three types of tips we use in the max and you can apply immediately in your own trading process. And these trading tips will help you to improve your trading. And so I will show after that some recent trade made with the MAX with the two approaches we will propose you for today. But let's first of all, in order to thank you for your presence today, let me give you 3 trading tips you can apply immediately in your trading process and to improve your result with your trading. And these concepts are important concepts we are using in the MAX. And they are especially dedicated, first of all, to some exit techniques. We have several exit techniques, as I have mentioned a few moments ago, and 2 of them will be based, first of all, on the behavior we can observe between the price action itself and an oscillator, a momentum oscillator, and the divergence we may observe at some moment may be an excellent exit technique, and I will explain why. And then I will show you an example of pure price action exit technique illustrated with the concept of the long bar. And then I will explain another very important concept with the same examples we call the risk reduction. How do we control the risk and how do we progressively reduce the risk along a trade until we get a risk-free trade or a guaranteed profitable trade. So these 3 concepts are illustrations of the concept we have within the MAX. And so let's start immediately with the first example. And in order to make it easier to present, of course, all the examples I will show you are present in the PDF. You will receive the PDF, but I will illustrate them with my MetaTrader platform. And so let's take a pair here. I will take the EuroCAD, for example. It was a few days ago. It was, I think, on Monday. The 26th was Monday. No, it was Tuesday. And here we have a down movement, a downtrend, as illustrated with our companion indicator. So the companion indicator here is a 2 lines indicator. The line which represents portion in red and portion in green is called the slow bias. And the line in blue and orange is called the fast bias. And the slow bias gives us the technical direction we have to trade. And so when the slow bias is red, we will look for short trade, and when the slow bias is green, we will look for long trade. But of course, the trade must always be in agreement with the global context. So what is the global context? I will explain the global context later when I will illustrate some trades. And so here we suppose that the global context was indicating to us that we had to show the EuroCAD, and precisely we have the slow bias being red, so we can look for a short trade. And so we have made an entry here, which is named short entry number 1. This short entry corresponds to one of our possible entry setups we have. And then later, as the movement is unfolding, is developing, one important exit technique we have is the concept of divergence with a momentum oscillator. Within the MAX, we can use several types of momentum oscillator, and the one I'm illustrating is called the stochastic of the RSI oscillator. So we apply the stochastic to the RSI indicator, the RSI being the relative strength index, and the stochastic you all know, I suppose. So it's a combination of both, which gives us all we need to consider our exit technique. Now, one point which must be clear here, an exit technique will never predict how the price will behave. A technical indicator at least. It's not because we have the stochastic RSI which moves upward in a downtrend that the price will necessarily reverse to the upside and vice versa. Similarly, when we have a divergence, this does not predict that the price may reverse. And so what is a divergence? You can observe in this part of the chart that the price has made 2 lower lows. And at the same time, in the stochastic RSI, the stochastic RSI has made 2 higher lows. So we have lower lows in the price, higher lows in the stochastic RSI. So we have clearly a divergence. And this divergence is indicated that now, just now, and in a recent past, the momentum has decreased. So the momentum was already to the downside. Now the momentum is decreasing. Does this mean that the price will continue to go upward? Certainly not. We cannot predict with an indicator what the price will do. But what we can do is the following point, and this is extremely important. Many traders consider that technical analysis is useless because the technical indicators are lagging, which is true. Sometimes they are lagging, sometimes they coincide with the price. Sometimes an indicator like the STO RSI is even leading by 1 or 2 bar the price. But this is not the most important point. The most important point is the following. The STO RSI moves between 0 and 100%. So it moves in a closed range, in a closed interval. And this means that because the STO RSI cannot go lower than 0% or higher than 100%, when it reaches some extreme point, this can give us some useful indication. But the main usage we have with the STO RSI is as soon as the price begins a pullback. So the price is making a low. The low will be mirrored by the STO RSI. The question is how far the pullback will go. We never know that in advance. But surely, when the price is making a pullback, this pullback represents a risk for our trade, because while the price is pulling back, a portion of our potential profit is disappearing. And the question is, how much can we accept for the price retracing? And so this indicator help us to quantify when the risk is becoming too much important. And when the risk becomes too much important, we have to decide to at least close partially our trade to bank some profit and so to reduce the risk we have on the trade. And so in this case, we have indeed with this blue candle what we call an exit setup. And with this exit setup, we define an exit level, and if the price follows through and hit that exit level, this indicates to us that now we have been able to quantify that the risk of this pullback was becoming too much important. And we make what we call a partial exit. A partial exit in the MAX methodology is called an MX, a momentum exit. And so here we have our first partial exit, and so we close, for example, 1 unit of the trade. We can consider that whenever we open the trade is made of several units, and here we close 1 unit. This unit bank a small profit of 13 pips. Later on, the trend resumes, and we have again another divergence, with the price making again 2 lower lows, the divergence making 2 higher lows, so we have another divergence, and we apply the same technique. Once we identify our setup bar, exit setup bar, we define an exit level. We can see that on the next blue bar, the price follows through and hit that level. We make a second partial exit if we have enough open units, of course. And later on, the trend resumes to the downside, and we have again another divergence, with the price making again lower lows and the STO RSI higher lows, and we apply the same technique, closing another unit here. And so if we have opened the trade with 3 units, we have been able to progressively close these 3 units, banking every time a profit. And by making these MX, in fact, we are progressively reducing the risk we have for the entire trade. And so the MX technique is one way to control the risk we have along the trade. A second technique is to progressively adjust the stop loss along the trade. We have specific rules to adjust the stop loss too, which will be taught in the course. And so in total, this trade, if we consider only the exit technique with the divergences, we have been able to catch a 67 pips profit, representing a 1.02 rework to 1 rework to risk ratio compared to the size of the stop loss. So this is an example of the divergence exit technique and the stop loss adjustment in order to control the risk we have on the trade. You can know that the second time we adjust the stop loss here, when we have made the first MX, on the first MX we have banked a profit, and with the stop loss adjustment, the other units are break even. And so at that point, we are in a guaranteed profitable trade, whatever the price will do after that. A second example I will show is the following. So in an uptrend, we have exactly the same technique now in an uptrend after a long entry. Whenever we see higher highs in the price and lower highs in the RSI, we have an exit technique. Of course, in the max, we will teach you what is a valid divergence. And we have several types of divergence. We have what we call the basic divergence, we have the persistent divergence, we have the external divergence, we have the group divergence, and it's even possible to define other types of divergence. And so we apply the same technique. So we have a first divergence in this area, giving a partial exit. We have a second divergence, then a third one, making progressive exit. And so you can see the type of result we can obtain. So this is the first. Yes, Chris, please.
Sorry. Hi, everybody. I'm Chris. I'll be doing a bit of a presentation later. But I just wanted to point out, Sabio, you're using the stochastic RSI there.
Yes.
This technique applies to pretty much any momentum indicator, so you don't have to hit this one in particular.
Yeah, indeed, we can use, indeed, as I have said previously, we use in the max several types, or we can use several types of momentum oscillator. We can use any of them, indeed. This is why the technical indicators are only tools helping us. So they are not the secret to be successful, in fact, but they are just tools when we understand the process of trading. The second technique I would like to illustrate is the following one, which is called the long bar exit technique. Long bar. A long bar is a bar having an unusual length. Intuitively, you can understand what is a long bar. We have precise rules to define when a bar becomes a long bar. And so its length is related to the length of some previous bar. And so in this case, we have a long bar. And in fact, whenever we have a long bar in the direction of the trend, this means that the price has moved nicely by a big number of pips. And these long bars, we have an example here, we have another example here, are always good opportunities to bank some profit or to consider the possibility to bank some profit. Why? Because very often, approximately 2 out of 3 times, after a long bar, we have a pullback. And sometimes the pullback may be a deep pullback, erasing totally the swing movement containing the long bar. And so why not consider to bank some profit when we have such a long bar? And so when we see a long bar, when the long bar has closed, we can define an exit level corresponding to a portion of the long bar we will accept as a possible retracement. And if indeed the price retraces and hit our exit level, we will make a partial exit, as indeed in the technique I have described with the divergence. And so here with the first long bar, we have a partial exit banking 40 pips for the unit we close, and later we had a second long bar helping to close another unit. It depends, of course, on the number of units we have, but helping to bank 49 pips starting from our entry. And so you can tell that these long bars are very, very nice technique to bank some profit, because they always guarantee a nice profit when the long bar happens. And we will use also the same technique to adjust the stop loss to progressively reduce the risk we have on the trade, and at some point to lock more profit. You can observe in this example that later we have other divergences between the price making higher highs and the RSI making lower highs. So in this case, and so we can combine, in fact, the exit technique, and this is what we do with the max. Now let me show you some real example of trade made with the entire max, because these were only some example of the technique we are using, and you can use, as I have said, you can use directly in your trading system if you want to improve your trading process. Let me take here another pair, which will be the pound CAD. And with this pound CAD, I will present you an example of a trade made with the basic form of our max methodology, which is called the max ETF primer. The max ETF primer is an introductory or an introductory level to our max ETF standard course. It is a course by itself, by the way, because the max ETF primer is profitable by itself. And so I have said previously that in order to have a trade, we need to observe that a new trend begin to appear on a technical point of view, but this trend must be in agreement with the global context. So what is the global context? The global context is formed with all the elements which can influence the price movement. And among these elements, we will find, of course, the news release, but we will find also the decision by the central banks in their interest rate policy, in their daily operations. We will find, of course, also all the geopolitical elements. You have seen for several years now the influence of the Brexit on the pound. We are seeing the problem between USA and China, between USA and the Middle East as influences in the currency, the different currencies, especially the US dollar. And there are many other geopolitical elements we have to take into account. So the geopoliticals, the news release, but also some constraint during the day, especially if we trade with small time frame. My preference is to trade the 5-minute time frame, but any trader can trade, in fact, any time frame. The small time frames are the time frame from the 1-minute time frame up to the 1 hour. All the higher time frame are considered as high time frames. And so in this example, in agreement with the context, we have here the beginning of a new uptrend, and as soon as a new trend appears, so to the upside, we know that we are in agreement with the context in this case. As soon as we have one of our entry pattern, we can then consider to open a trade. And whenever we open a trade, we associate a risk which is defined with the stop loss. We always define a stop loss with a trade. The size of the stop loss is defined with specific rule because we have minimum requirement for the size of the stop loss, depending on several factors, but also in terms of risk, how much we want to risk on the trade in terms of percentage of the trading account, which will represent the maximum loss we can accept on any full losing trade. For example, it may be 1 or 2% of the trading account. Then, once the trade is opened, in this case, we will consider that the trade is made of 2 units. Of course, in terms of trade risk management and money management, in the course we explain how to define the size of these 2 units with the concept of position sizing, in such a way that later on, when the price moves in favor of the trade, at some point we will have an exit technique. This exit technique represent a risk in the trade, and when this risk becomes too much important, we have to define an exit level, and if the price follows through and hits that level, we will close 1 unit. So leaving us with 1 open unit. So we make an MX, catching in this case a profit of 22 pips. And later on, or in the meantime, we adjust the stop loss to better control the risk we have on the trade, and later on we have another exit technique telling us that we have to consider closing the second unit, and because we were left with just 1 unit, that second exit will be called a full exit or an XXX. XXX represents the full exit, whatever the number of units which are opened at that moment. Sometimes, as you see in this example, we will be able to refine our exit level, but this was not applicable to this example, but sometime we will be able to apply what we call a ratchet technique. I think this is something which will appear in the next example. So here we close the second unit, catching 25 pips. So we have 22 and 25 pips for the 2 units, representing a total of 47 pips. And because we have a stop loss of 23 pips, so this represents a reward to risk ratio of 1.02R, R representing the risk. So this is equivalent to the notation 1.02 to 1. This means, so I'm using the Van Tarp notation. This means that if we use a risk of 2%, this trade makes a profit of 2.04% on the trading account. Similarly, if you use another risk in terms of percentage of the trading account, the multiplication of that risk times the reward to risk ratio gives you the financial result on your trading account. So this is an example of a trade made with the Max ETF Primer, which consists in having an entry setup followed with an exit setup and then another exit setup to close the 2 units we have opened at the moment of our entry. And then later on, if we have the opportunity to open another trade, if the trend is still valid, we will open another trade and we will handle the trade exactly the same way. On average, with the MaxETF primer, especially during the European session, we have between 1 and 3 such trade between the London Open and the London Close. We may have, of course, several other trades during the Asian session and 1 or 2 other trades during the second half of the US session. Now, so this is the basic form of the MAX, but we have the MaxETF standard course, which is our flagship course, which contains the mechanism of scaling in, which exploit at full, at best, the trend we may have. And so the next chart will show you how the same movement has been handled with the MaxETF standard. First of all, we have been able to open a trade earlier because we have many more entry setups with the MaxETF standard. And because we have been able to open the trade earlier, you can imagine that the profit will be better. So, and later on, after the entry, a first exit setup appears, forcing us to close 1 unit of our entry. Later on, another entry setup appears, and this entry setup, when all the conditions are fulfilled, I mean, are we still in agreement with the global context? Is the scaling applicable in terms of risk for the trade? And so if all these conditions are fulfilled, we can add to our trade by making a scaling which consists in adding 2 more units to our position. And we'll call it the entry number 2. It is the first scaling. Later on, we have another scaling opportunity. And so we have now 1, 2, 3 entries totaling 6 units, and we have made 1 exit, so for 1 unit at that moment. Just after the scaling entry number 3, we have an exit setup forcing us to close again 1 unit, contributing to reduce the risk we have on the entire position. And you can see that we are also adjusting the stop loss, helping also to control the risk on the trade. Later on, we have an opportunity to make a last scaling entry, so we have made 4 entries along that trend, followed with 2 additional partial exit, the exit number 3 and the exit number 4, or there is a small typo here, it must be the exit number 4, and then the full exit. When we have to make the full exit, we are left with 4 open units. Indeed, we had 4 entries totaling 8 open units, and we have made 1, 2, 3, 4 exit with 1 unit per exit, so we are left with 8 minus 4, or 4 open units. With 2 of the units, we are able to bank 39 pips for each unit, and for the 2 other, 31 pips for the 2. It depends on which entry we apply, so the exit, so here. And so all these closed units total a profit of 280 pips, representing a reward to risk ratio of 7.37R compared to the stop loss size of 19 pips. And so you can see that the fact that we have a smaller stop loss, but also multiple entries and starting earlier in the trend, so make the total profit way, way larger than the profit which has been made with the same movement with the MaxETF primer. So the MaxETF standard helps to produce generally between 30 and 300% more profit than the MaxETF primer. And so these were 2 examples of the MaxETF primer and MaxETF standard in the Forex with a small time frame like the 5-minute time frame. But as I have said, the Max applies to any time frame and to any market. Let me show you now an example with a famous index. I suppose that many of you like to trade also the indices. If you trade, for example, in the futures market, one of the most traded index is the ES, or the contract is the ES, corresponding to the Standard & Poor's 500, and you can trade the mini contract or the macro contract now. But let me show you on the with MT4 platform what we can do when the broker allows you to trade CFD, so contract for difference. If your broker does not allow you to trade contract for different, you can trade the futures contract, of course. And so let me take here the S&P 500, and I will show you first of all here in the daily time frame. So I have taken the daily time frame, so a higher time frame. And so we have a downtrend which corresponds with the global context we had at that moment. And we have also a technical downtrend because the slow bias is red. And at some point along that trend, we have a short entry helping to open a trade. We have our stop loss. And then, so we control the risk, we control the entry, we control the trend direction, and then we let the trade develop. And at some point, we had all along that down movement, we had no exit technique applying or triggering, but at some point we have, for example, here a divergence, and at the same time a trend reversal. So the trend was reversing in conjunction with a divergence in one of our momentum indicators. Indeed, the price was making lower lows, but the Stochastic RSI was making higher lows. And we have two successive divergences in this case. The first divergence has given no exit because the price has not followed through enough to reach our exit level. The second divergence, the price has followed through, so giving us here an exit setup. But because we had also an ETF trend, so the trend reversing, we were forced here to close immediately our two open units. Each open unit were catching 403 points, not tick, points. So making the total profit of 806 pips with a reward to risk ratio of 1.49R with a stop loss of 270 pips. So, and if you divide 806 points by 270, you will find a result, a ratio which is 2.98. But in fact, because we are using 2 units, the total number of points must be divided by 2, and then the result must be divided by the stop loss to have the real reward to risk ratio. And so this is a trend which has lasted a few days, less than 1 month. The vertical dotted line represents the time separator. We are in a daily time frame, so this has lasted approximately 2 weeks. Now let's see the same movement, the same down movement traded with the Max ETF standard. It's the next chart here. And now, because we have more entry setup and more exit technique, we are able to catch the trend at its very beginning. You can see that the entry is very close to the reversal the price has made, giving us a stop loss which is way smaller, only 120 points here. So we have a first entry corresponding to one of our entry setup, followed a few bars later by a first exit, followed after that by a scale-in, followed after that by a second exit, followed after that by a second scale-in, followed with a partial exit, another partial exit, and then the final exit. We were left with 2 units open, so we are forced to close these 2 units when we had again a divergence in the Stochastic RSI and the trend reversing in the slow bias. And now with these multiple entries and multiple exits and the stop loss adjustment, so we apply all the techniques to handle the trade, and so the result is an amazing result of 2,560, not pips but points. There was a small glitch here, points, because in the futures market we talk in terms of ticks and points, and so, but the result is 10.67R instead of 1.49, so with the max parameter. So we have been able to multiply the result by more than 5, so with the possibility to add scaling to our position while controlling the risk with our trade. And we will show you in the course that we have a very strict risk when we make our scalings. So this will happen sometime that when we have an entry for a possible scaling, we will be forced to skip that scaling because in terms of trade risk management, this scaling is not good enough and would introduce a risk too much important for the global position. So I hope these examples are clear enough to show you how we handle a trade, or to give you an idea how we handle a trade with the Max ETF standard with its component of scaling in, but also the risk control through the partial exit and through the stop loss adjustment. So All the examples I have shown are in the PDF, and so you will have that PDF with a small a glossary about some of the examples we are using. And so in conclusion, so every Max course will provide you with trading methods and concepts that work. And I explain why these concepts work. They work because we take into account the global context. We take into account, so the global context to define in which direction we have to trade, to define also what instruments are more worthwhile to be traded. This is the first pillar of any serious trading system. Then we use technical analysis to time our entries and our exit. This is the second pillar. And then the third pillar is the trade risk management, which allows to control the different steps of the trade, but also the money management, which allows to define the financial risk and to control the financial risk we use on each trade in order to grow the account and to minimize the drawdown when we are facing more challenging situations. So because we don't have a 100% winning rate, we have around 70 to 75% winning rate, and we have around 15 to 20% to losing trade. But fortunately, due to the technique we are using, any loss is always a small loss compared to the profit we can extract from a winning trade. And so with the Max, so we also reinforce your trade skills and money management. These are two essential aspects of the trade. Through the training and the different activities which complement the training, we want you to master completely the Max concept and rules in order to improve your skills in trading and to understand the concept of the trade risk management and the money management, to have a control on the risk aspect of the trade and on the financial aspect of the trade. And so with the Max, so you will increase the confidence in your skills. Increasing the confidence in your skills means that you will increase your confidence in the market, with the ability of the market to generate enough opportunities day after day after day. Confidence in the Max in its ability to catch these opportunities, or almost all of them, and confidence in your own skills, in your ability to apply, in fact, the rules of the Max to catch the opportunities the market will give you. And in order to build and to progressively increase the different level of confidence, so we offer mentoring aspect, homework, and free workshop or free activity. Chris will tell you a little more about these aspects, so in a moment, which are essential aspects within the Max. And so we propose to you today, so two different courses of the Max. The Max ETF standard course, which is our flagship training with the scaling technique and the complete trade risk management and money management, and of course the global context. We explain what the global context is and how you have to take it into account. And we propose also our basic introductory course, which is the Max ETF Primer, which is a small set of the Max, in order to give you an idea who we are and what the Max may be, and if the Max may be suitable for your trading process. So this was my presentation. If you have any questions about what I have explained, so feel free to put those questions in the question area of GoToWebinar, and we will answer all of them. And now I give the mic to my friend Chris, who has important information now for you. So Chris.
Okay, thanks Eusebio. To everybody that's listening here, thank you very much for sort of signing in on this. As you can see, my name's Chris. I'm partnered with Eusebio and Craig in the Max trading system. I'm based in New Zealand. Eusebio is in Belgium and Craig is in the US. We've been working together for over 10 years now. And this is the 69th set of our Max courses. As Craig said, we've trained over 2,000 people. Max course is based on Jim's ideas initially, and Eusebio has added enhancements to Jim's ideas along with completely new additions to it as well. For instance, the bias that you saw, so that you get an idea on what direction the trade is going to move. The idea is that once you can start trading, you're going to be able to provide yourself with some income security. These days with things like COVID going on, the recession that's hitting all around the place. There's a lot of external shocks kicking in. And so with being able to trade, you can work from your home or pretty much anywhere in the world that you want to go to, if you can get there these days. And it's not just about getting income for yourself, but you can become debt-free, look after your charities and church, do philanthropic work, travel as much as you like. The Max works on any time frame and in any market, so you can go places and trade in different time frames as you wish. And as we've been asked, it works on Forex, futures, options, stocks, shares, pretty much any chart that will move. Oil, gold, all the metals, CFDs, indices, you've got the whole range available to you. Somebody did ask, will it work with binary options? And I just want to warn you to be very careful about those. A lot of countries have either banned them or stopped people from being able to advertise them, as they're seen as being ways to rip people off. So a lot of people have started out by failing multiple times with their trading. And this is generally because they've got poor money management, or they don't know about the risks side of things that are going on. When I first started, I'd be trading and all of a sudden there'd be a spike and I didn't know why that was happening. And other people just have, I've got all this money, I'll place it here on this one trade and hope that it works out. So it's an all or nothing kind of situation. And a lot of the times the trades don't work out. And if you don't have good risk management, good trade management, then you can lose your account very quickly. And way back when things first started out, the general thinking was that average traders would lose their accounts about 3 times before they became profitable. It doesn't have to be that way these days, because there's a lot more information out. And if you follow the Max, then you will be able to protect yourself much, much better than in the old days. One of the things that sets the Max apart is that we're incredibly risk averse. If you watch what Eusebio does, he is a dichotomy going on with him. He's very risk averse, but he's also very greedy. And he can pull in huge amounts of pips because he knows how to manage his risk, and that's the way to do it. So I've going to try something different with this session and see if I can get some responses from you. People want to become traders. And the thing to know about is, what is your prime activity as a trader? So if you'd like to just type something into the chat to answer that. What is your prime activity as a trader? What's the essence of being a trader? Okay, Robert's saying to increase wealth. Anybody else? Looks like people have, okay, control risk. Okay, Joseph, thank you. Greg's monthly income. Okay, those are good goals. So, okay, and there's others coming in, mostly on make profits, get rich. Okay, so thank you for replying. It's a really good question to ask yourself. So what your prime activity as a trader is to take on risk. You are there to accept risk from the broker. It's not to make profit or anything like that. That's secondary. The whole thing for you, for trading, for your existence in trading, is to take on risk from the big boys so that the markets can be more liquid. And then your first priority is to minimize that risk and then to make profits from it. So you're actually, when you're doing trading, you're a risk taker first. That's the very first thing. And so the idea is to minimize that risk as much as possible so that you can optimize profits. So when we're training, and Leonard said consistency, yep, that's a really good thing to do. But first you have to take on the risk, and that's your prime activity. And in order to get there, you need a really good system so that you minimize that risk as much as possible, and then you're able to optimize the profits. And this is what the Max can help you do. We show you precise, detailed setups. Some of the setups within half a pip of the setup actually signaling itself. It depends on the market and the time and all sorts of conditions, but we will explain that to you. And then with the standard, you can boost your profits over and above the regular buy and sell systems quite a bit, sometimes 30%, sometimes to over 300%, simply, well not simply, but by using our money management system and with the profit acceleration. And as a result of all that, what you'll find is that counterintuitively, the more that you scale into a trade, if you do it properly, the less risk you actually end up with. And in fact, after a while, you end up, and very quickly, with a guaranteed profit. Okay, what some of the things that you're going to come across when you're trading is poor price action. We're coming into that kind of time now with small, tight ranges. Recently, during Brexit, there's been sudden large moves, which are really hard to deal with. Knowing what direction the price is actually going to go in, you can look at a chart and it could be just going up and down. We call it chop. So we help with bias indicators and global information coming from us to give you an idea on which direction you could be going in. The indicators that you're using can be slow and lagging and not give good information. And a lot of the times the information on the bar charts themselves, especially with MetaTrader, there's not that much information to actually help you with. So how we can help overcome that is that the MAX system overcomes these challenges by adapting to most markets. So whether it's in a trend or a counter trend or a breakout or a chop, you're able to figure out what type of entry you should be using. I should point out that I'm speaking mostly about the MAX standard course and not the primer. If you consider the two courses to be like cars, the MAX standard is a very nice car. It will take you wherever you want to go, good speed and all that sort of stuff. The MAX primer is more like a scooter. So it will get you there, but it's a bit more work and it's a bit slower. So that's kind of the difference between the two. And the standard, the nice luxurious car, can account for most conditions. The standard has got more trades, has more entries available to it and can take on larger movements. So if price is moving really nicely, the primer movement, the primer method might get you out a bit earlier than the standard, simply because the standard has got a lot more entries and will go further and longer and make you more money on that side of things. Both of the methods are very nimble. They can get you in and out of movements quite quickly, and while minimizing risk. And the bias that Eusebio has brought into play with his slow bias, or it's also called the companion indicator if you've heard some of us before, gives really good technical direction on which way the price is likely to move in. And also we help to minimize your risk. Like I said, we're really risk averse. The reason for all this is that we want you to be able to have security with your trading, that you're able to become independent and away from any of the issues that are going on around you at the time. For instance, like the virus or recessions, unemployment, that sort of stuff. One of the things that sets us apart from our super risk aversion, is that we ask you to do homework. You don't have to, but this gives you practice at the information that we give you. It puts it into, it places it in your brain. It crystallizes it in your thinking. And then we give you feedback on what you've done. We ask you just to send in the charts for the particular setups, like the entries and the exits. And then we can give you bar by bar feedback on what's actually happened, where you might have gone wrong, or how you can perhaps do it better. And there's a nice quote that came up from just yesterday from BF, who was replying to some stuff. He said, "I hate homework. However, one of the things I've realized that I tend to grade myself on a large curve," which means he's being overly optimistic, that the objective feedback is awesome. So, and he really did take advantage. He sent through something like 7 homeworks. What you actually get from us is a full system when you do the course. All the materials, there's nothing extra to buy. Any examples, videos, etc. are all supplied. The training is professional. Eusebio trades full-time. So what we want you to get from all this is a really powerful and safe trading method. The standard is very, very safe and can complement your existing system. So when you're scaling in with the standard, you can, and that means adding to the orders, and I wouldn't do this on your own because you can really get into a very risky situation, but using the max money management, as you scale in, you can actually decrease the risk and become into a guaranteed trade very, very quickly. And if you've got a trading system that you're using already, many people have used our scale-in techniques to complement their system and to boost it, to boost the profits from it. The win-loss ratios are very high with the max. Eusebio's already mentioned it's around about 75%. So it depends on the market, the time, and the time frame that you're using. We can get up to something on some of the longer time frames up to around about 90% winning ratio, and the profit loss is very good. What we want you to be able to do is be able to pick the movement directions. So two of the hard things with trading is what pairs do I use and what directions should I be going in? Should I be going long or short? So we've got technical sides of things to give on the charts to give you an idea on which way price could be moving. Eusebio has extra information that can give you directions on the overall direction of the market itself. And we'll show you this in the Newswatch at the end of the session. And we want you to achieve your goals so that you've got independence, you've got something to fall back on, you've got some security. You don't need to rely on a job and a boss, and so that you can go out and retire, look after your family, do philanthropic work, whatever. We've got 2 courses available today. The standard, which is the full-blown course with 7 sessions, the profit acceleration, and the comprehensive, and it's easy to use trade and risk management. It's quite comprehensive. It will look after you really well, and you don't have to do complex equations while you're trading to use the trade risk management. It's quite simple and natural as you're using it. The ETF Primer, on the other hand, has only 2 sessions. It gives you just basic entries and exits. It is profitable. It's just a buy and sell system. The standard way outperforms it, like I said, 30% to over 300%. Depending on the movement, you'll be able to make more money from the standard than the primer. The standard course that we're offering begins on June the 11th. It runs for 7 weeks, and the normal price is just under $3,000. The webinar special is $2,399, and the primer course begins a bit later on June the 15th, runs for just 2 sessions. You don't get quite as immersed in it, and it's normally just over $300. The webinar special is $159. Both of them have got all the support that you ask for, the practice sessions on the weekends, most weekends, and the homework as well. Here are the 2 courses together to give you an idea. It's got all our contact details. So whichever one you're interested in, you've got the link there. It's that, and I've got some contact details there for us as well. If you want to ask us questions, always happy to help on that side of things. But right now, now that I've gone through all that, I really do recommend that you take the standard course as opposed to the primer. The standard course is much more profitable, much more detailed. So what other questions do you have? I'm not too sure if you've seen them, but we did ask some people if they had some questions, and they sent them in to us. One was, what's the minimum size dollars to start trading? And Eusebio, rather than me gabble on too much, do you want to answer that one?
Yes, sure.
Just,
It depends what market you want to trade. Especially in the forex market, you can start with a small account of $1,000, $2,000. I don't advise to go lower. For example, you have lots of broker advising you that you can open an account with just $100, but with $100 you will never make something very serious. You need a minimum, really a minimum amount of $1,000, $2,000. $2,000 is better, just to be able to apply the scaling technique. Because with scaling technique, you need to have some free margin, and so this is the minimum which is required to start. Now, in other markets, it depends on the conditions on the market. For example, in the futures market, because of the larger margin which are recorded, and because of you cannot trade a portion of a contract, so you need generally a minimum size of around 2,000 to 5,000, and sometimes more if you want to trade higher time frames, because when you trade a higher time frame, when you keep your trade open overnight, you have big maintenance margin, and so you can need $20,000, $30,000 as a minimum in your account. For the equity market, it depends on the regulations, because different countries have different regulations to the minimum required to the trading account. So I advise you to contact or to get the information depending on your own regulations in your own country.
so one of the nice things with Forex is that you can do it in very small steps to start with. So you can learn the max. Say for instance you want to trade your $30,000 account, or you want to build it up to that. You can start off with just like the $1,000 or $2,000 account, trading only very tiny small amounts of money until you get used to the processes, and then you can crank it up larger, go up incrementally, almost in an infinite number of steps. Whereas opposed to the futures, where you have to take it in kind of big $12 jumps at a time, depending on the contract. Okay. Somebody has asked, are pivot points still viable? Eusebio, this can, again for you, because you do the price levels.
Yeah. What is the question, Chris? I have not understood the question.
Okay. The person has asked, are pivot points still viable? Do they still work?
Yeah, pivot points are still used by many traders, and as you know, when you use a standard tool which is known by everyone, they become self-fulfilling prophecy. And so yes, the pivot points, so and you know that there are different types of pivot points depending how you calculate them, with the open of the day, with the open of the previous days, and so on and so on. So they are still valid, but personally, I don't use them. I prefer to use what we call the max price level, which corresponds to supply and demand level we believe exists in the market. So,
and on the price level side of things, each week Eusebio produces price levels for the max. There are free ones that are available. Craig will send you out information for 4 pairs, 3 pairs and one. Sorry, is it? One index, Eusebio, that you send out?
For the for the 4 free pairs instruments, it's only 4 pairs: the Euro US dollar, the Euro Aussie, the Aussie yen, and the pound yen. For the full package, so there are approximately 30 instruments, so around 18 pairs, several indices: the S&P 500, the Dow Jones, the Nasdaq, the German DAX, the British, the UK FTSE 100, then 2 commodities, gold and crude oil, the Bitcoin also. Yeah, and that's it.
Another question that's come up is, how important is multiple time frame analysis for the max?
Yeah, in fact, let's come back again to the chart. Let's take, for example, a pair like the S&P in the 1 hour time frame, for example. Here, I have used the 1 hour time frame. The daily time frame. And so, in fact, when we trade in a specific time frame, we have, of course, the template which applies other indicators on the chart. I'm just showing a subset of them. And these indicators are showing also what is happening in higher time frames. For example, the home base, this blue moving average represents what we call the home base. It's a moving average which represents what is happening in a time frame 12 times higher. The slow bias, so the line in green and red, represent what is happening in a time frame 4 to 6 times higher. So when we trade the daily, so this slow bias represents what is happening in the weekly time frame. And so we have on just one chart what is happening in several higher time frames. There is no need to switch from one time frame to another. If we trade, of course, a pair like this one, in the 5-minute time frame, the slow bias will represent what is happening in the 30-minute time frame, and the home base what is happening in the 1-hour time frame. And so we may have an idea that way of the technical quality of the trend. But of course, the trend does not necessarily, the technical trend does not necessarily represent the trend direction we have to trade depending on the global context. The global context is something else. In this example, if the global context tells us to trade long, this means that we have to take only the long trade when the slow bias is green. If the context tells us that, and we will ignore all the short trade, if the context tells us that we have to trade short a specific pair, then we will take only the trade, the short trade when the slow bias will be red. And so the global context is extremely important. And to help our members to understand the global context, if they do not want to make all the analysis, which is a complete analysis, a context analysis, if they do not want to do them themselves, so we provide other information. One of them is called the Max News Watch list.
The news watch itself, the top 10 pairs, the list of the news, the criterias that you need to watch for as the different conditions around the world are unfolding, are all available on our website at no charge. So it's just, I'm saying this because I just want you to realize we're not just interested in the courses themselves, but we're there to give you a complete trading method as opposed to just an indicator system that might work sometimes or might not. You can see how comprehensive we get. Okay, I think it's about time to wrap up, Eusebio. There are a few more questions, but perhaps in the non-farm payroll session that's coming up this week on Friday, you can answer those.
No problem.
Yes, Alex, we supply videos for every session that we do, so you can keep rewinding them. And if you have any questions about something, the practice sessions on the weekends, Standard gets one pretty much each weekend. The primer course misses out because when we're running a Standard, we don't want the primers in there. Sorry, primer, but there's at least 2 per month for the primers. So thank you very much for attending. I look forward to seeing any more of you. And if you have any questions, send them in. But we'll be running the non-farm payroll, and I'll leave it at that. Anything else that you want to add, Eusebio?
Yeah, simply you can also contact us with an email at our email address, support@maxtrading-system.com, or contact us by Skype. Our Skype ID is Max Trading System, so very easy to contact us. So feel free. So we are there to help and to answer any question or any clarification you will need. Bye, everyone.